Hello, everyone. Welcome to a live market update with Buying South Florida. Today, we're going to talk about what's happening in the real estate market in reference to mortgage rates and how that's affecting the property values and how we see the property values being affected going forward. Then we're also going to talk about some market stats. We're going to look at Broward and Miami-Dade County, specifically the condominium market. Right. So today we have Dominic with us. Dom, say hello.
What's going on, guys? Pleasure to be back. It's fine. It's about time we get back on here for a market update.
Absolutely. So we've been seeing in the news, or maybe the bad news is rates have been going up, but that's not necessarily the case, and it really depends on the type of loan that you're doing, whether the rates have actually gone up or not. Now, remember, the Federal Reserve increasing their interest rate doesn't directly affect the mortgage rates. The Federal Reserve raises those rates that affect the short-term variable interest rates, things like student loans, credit cards, like that. So the fixed 30-year mortgage rate is really more affected by the inflation rate, right? And not to get too technical, but it almost follows the 10-year Treasury bond. So I want to share with you guys the Treasury bond 10-year. Right, so on here, you see that Treasury bond, it currently sits at 3.1, right? So it's just over 3%. It's kind of spiked in the middle of June. This is where we saw the worst interest rates in the mortgage market. Now, anytime, in my opinion, anytime that we see the 10-year Treasury over 2.75, it's going to put pressure on the home values, right? So we want to see, on the real estate side, we want to see anything over 3%. We expect it to push the values down a little bit. And then we want to see anything under 2.75. We expect the values to go up a little bit on the real estate side, right? So it's worth keeping an eye on the 10-year Treasury if you're someone that's kind of sitting on the sideline waiting for the right moment to buy something. If you're a tenant and you're kind of just trying to time the market, here's a good chart for you to follow, the 10-year Treasury. Dom, you want to add anything to that?
No, man. Obviously, whenever the Fed holds a meeting, the 10-year Treasury bond will most likely follow data presented by the Fed. So, like you stated, it is a good indicator and something to follow for anyone who is kind of waiting on the sidelines, looking around stating that, oh, interest rates are high. But I follow the 10-year T-bond pretty much every single day, try to keep a good eye on it because obviously some banks and some lenders decide to reprice. It could either, the market could A, deteriorate, or B, it could improve and rates will get better. So let's say you and I have someone in the pipeline with a rate that's floated. We want to make sure that if market improves, boom, we want to make sure that they're locked in. So it is very important, like you stated, for anyone who's looking at, I don't want to get under contract unless rates are so-and-so, follow the T-bond, you'll pretty much get your information there.
Yep. And we talked at the beginning of the year how interest rates increasing by 1% would cause the market values to decrease by 10%, kind of a rule of thumb, right, in terms of affordability. So we're kind of seeing that already in the real estate market. I want to show you guys some stats relating to the condo market in particular, but we're also going to look at the single family residence because we're seeing a little bit of a shift in the market already. And this is year over year. So July 2022 versus July 2021, closed sales is down 27% in single family residences. But we're seeing an active inventory increase of 26% in single family residence. Now, one of the key indicating or the leading factors that I like to keep an eye on is the active inventory year over year. Remember, real estate is seasonal, so you have to look at a year over year numbers. So as expected, we're seeing a little bit of an increase in inventory in single family residences, 26% increase year over year in Miami-Dade. But something interesting is happening when we look at the condos and townhouse market year over year. We're seeing a decrease in active inventory. So as more single family residents went on the market for sale, we actually saw less condos and townhouses going up for sale, right? So it's worth keeping an eye on. And the less inventory is going to essentially drive up drive up the prices, hence driving up demand and so forth. So Dom, you want to add anything to that data?
No, man. I mean, with obviously with condos decreasing, but with there being a surplus in inventory for single family residences, it's a good indicator, man. It stands for a quote unquote like a healthy economy, and just seeing that there is a surplus with rates being quote unquote high. Like you and I always say, let's buy the dip, man.
Yeah.
Buy the
Look,
dip.
absolutely. And just to kind of touch on the rates being high, the rates are only high because we're comparing the interest rates to a 2-year period for interest rates were artificially decreased due to COVID, right? If you look back at the rates before COVID, the rates were at a 4, 5, 6%. So the interest rates are only quote unquote high if you compare them to a 2-year period where we had a pandemic and the Federal Reserve artificially decreased those rates. But if you look beyond those 2 years, you realize that the rates are just normal. The rates haven't increased by as much as the media is making it seem, right? So it goes back to just kind of the whole mindset of being a tenant and trying to time the market. It just makes more sense for someone to buy into the market, secure your fixed interest rate for 30 years, kind of lock in the cost of the rates going forward, and you don't have to worry about your property, your rentals going up every year. You don't have to worry about any of that. Once you bought into the market, you're now building wealth over time. You can now prepare for your next purchase, whether that's 1 or 2 years down the line. And one of the most common first step into the home purchase is condos. So we do have very, very interesting ways of qualifying condos for clients, for first-time home buyers that do not have that 20-25% that most banks require. We actually have pretty cool programs that qualify the clients with less than 20-25%.
Yeah. So to touch on that as well, usually there's two main reviews that banks look at, lenders look at. A full review, which is 5% down, and you and I actually have an approved condo list for both Miami-Dade and all of Broward. So if anybody here is listening and they want to take a look at the approved condo list for what you can do finance-wise as a full review, 5% down, or limited review, 25% down, feel free to reach out, DM, email us, and we'll be able to provide you with that and maybe go over a few things. So with the full review, obviously it's a 5% minimum down payment. Now, a lot of condos in Miami-Dade and Broward County are not eligible for full review.
Pretty quickly explain what a full review means.
Yeah, I was actually going to go into depth. So with a full review, when presenting a full review application to a lender, there are a couple things that you need to ensure and need to look over with your mortgage broker, such as there should be no more than 15% of total units in a project that can be 60 days or more past due on HOA fees. The condo's budget is allocated for specific line items requested by Fannie and Freddie. So that's a big thing. With full review, an underwriter or the lender, the bank, is going to want to look at a budget, the condo's budgets, the condo's financials. They want to see that the condo has specific reserves just in case something happens. So such as a litigation. And that's another big thing that we can get into, another rabbit hole. So most condos in Broward and Miami-Dade do not hold specific reserve requirements that these banks want to see for a full review. Now, that's where we come in. When they don't meet that reserve requirement for a full review, then you go limited review, which is 25% down. And like you were stating, Mario, most first-time home buyers, most people that want to get into a condo, they don't have 25% down. They don't have 20% down, or they just don't want to come out of pocket initially. It's their first home. They want to come out, less out of pocket expenses, get into there, get in secured, and then they want to maybe use that money to go around, maybe refurbish a place, so on and so forth. So we actually offer many different programs with a 10% down to qualify for the limited review. You don't need 25%. All you need is 10% down. So it's a bump up from the 5% for the full review, but we can ensure that you will get in your condo 10% down. We're saving you that extra additional 15%. And all you need as a minimum requirement is a 680 FICO.
Yeah, imagine being a first-time home buyer and you want to buy a condo, right? It's your starter home, and most lenders will require that 25% down payment because the associations do not qualify or they don't meet the minimum required as per Fannie Mae to qualify for a conventional mortgage. So essentially, these buyers are coming into the market, they want to buy a condo, and then they can't unless they have 25% down. Right? So what we have is 10% down instead of that 25%, right? 680 credit score is really what we need. And then from there, we can essentially go, or the buyers can go shopping for almost any condo, right? Because at that point, the condo doesn't have to qualify for reserves. We don't have to worry about whether they're saving money or not. Obviously, the buyer is going to do their own due diligence and review the condo finances. They want to make sure that condo is not going bankrupt. They want to make sure that condo is properly insured, right? But it opens up significantly more options for buyers that otherwise wouldn't have the option of buying a condo with 25% down.
Yeah. And to touch on that too, a lot of potential buyers do not understand is that lenders and banks, they need to see what is called a condo questionnaire, whether you're doing a full review or a limited review. And not to get too in depth, but a condo questionnaire pretty much just answers questions, legal questions that the bank needs to see, such as, does the project consist of manufactured homes? Has the control of the HOA been turned over to the unit owners? So on and so forth. So these are things that should be checked off and can get you eligible. However, on a condo questionnaire, there is always a question for litigations. And that's where, you and I see a lot of some of these condos where buyers will get under contract and won't even know that there's a pending litigation. And once we present that to a lender or to a bank, that could halt the financing process. Yep. So to save time, I think the advice would be, did you want to say something?
No, I was just going to add to that this is where the role of a good real estate agent really comes into play, because
that's where I was going to go.
Not only is a good real estate agent doing all of this legwork for the buyer, but also they're pushing the listing agent and the seller to disclose all of this information up front so that no one's wasting any time. Right now, we have an approved condo list, so we know which projects are approved for limited review, for full review, so it saves a lot of time. But that list is constantly updated. And if a condo is now being sued and they're in litigation, it's a good agent will point that out up front, and they'll bring it up to the buyer before they do their inspections, appraisals, condo questionnaires, so they can save them thousands of dollars and weeks of time just by being a good agent, being proactive and bringing those points up front.
Absolutely. Yeah. It's better to save time. Just get with your real estate agent and let them know, hey, listen, I just want to make sure I know everything that's going on before I get under contract and before I put $5,000, $10,000, $15,000 in escrow, because that could be on the line as well. So that's pretty much all I have for the condos. I mean, just the biggest difference between the full review and the limited review is that the limited review, it does not require a reserve study, which makes limited review condos much more eligible for financing. So if anybody has any questions out there, feel free to DM, shoot us a text. I'm sure, Mario, you have our contact information on this stream as well. It should be in the bio. So we'll be free to answer any questions that anybody has.
Yeah, absolutely. And then it's worth mentioning as the market continues to shift and we're seeing an increase in inventory over time, right? We're going to see more buyers enter the market to buy, instead of buying that single family residence, they're going to be buying the condos, because as interest rates push the values of the properties down, demand also wanes a little bit. That also drives the price, the values down. Increased inventory, as we saw in single family residence, will also drive the prices down. And then ultimately, you're going to have just more people entering the market. They want to stop paying rent. Rents are continue. They will continue to go up over time. It happened in 2007, 2008 when the market really crashed. Rents went up. As you have more more people or more buyers exit the market and become tenants, you now have an increase in tenants, which now you have more demand for rents, which more demand just increases the price. So if you're going to have the rental prices going up, it just makes more sense for these tenants to, instead of waiting to buy a single family residence, they may want to get into condos without having to give 25% down. All you need is 10% down, or maybe you can do 5% down if the condo qualifies, which we have that list that qualifies. So it's going to be interesting going forward, just kind of continuing to watch these stats, just to kind of see what happens, year over year. We saw, it's also worth mentioning, in Broward, the inventory for townhouses and condos came down 12% year over year in July, while the inventory in single family residences went up. So we're seeing that across the board down here in South Florida. So it's going to be interesting going forward. I think that anyone that has or is foreseeing a market crash, it's worth kind of understanding what you mean by market crash and how quickly you expect that market crash to happen, right? So for example, if you think it's going to be a market crash of what I consider 25% or more, it's not going to happen in a month or two. In real estate is slow, so it's going to take 4 or 5 months to develop. If you think that is going to happen, then if you're a property owner and you have equity in your home, now is the time to withdraw that equity and get ready to buy more properties on a discount. So if you think the properties are going to crash, take the equity out now and prepare for buying the dip. If you think that standing on the sideline, trying to time a market crash or a market correction that may never happen, or that it won't happen as much or as big as you think is going to be, just keep in mind, as more people do that, as more tenants enter the market, that's going to drive rents up. So standing on the sideline as a tenant, the more you wait, the more you're going to pay in rents, waiting for an event that just may never happen or may not happen to the extent that you expect it to happen. So keep that in mind as well. If you're someone that's actively looking to buy a property, which is my opinion, if you're a tenant, everyone that's a tenant that's capable of buying should be looking for something. Get out of being a tenant. Being a tenant, you're essentially postponing your retirement. You're paying for someone else's wealth. It just doesn't make sense if you're able to buy something, right? And if you're a tenant now and you're actively looking for something, don't worry about the interest rates. Interest rates fluctuate; they go up and down. Just last month, we were in the 4% in conventional. Sure, they went back up a little bit, but FHAs are still in the 4%, right? The news don't tell you that. The fear, the clickbaits don't tell you that, but the FHA mortgage rates are still very good, right? So keep that in mind as well. If you're a tenant, don't worry about the interest rates. Worry about stop paying for rent, paying someone else's investment, someone else's wealth. And ultimately, you're just delaying your wealth growth over time. You're delaying your retirement over time, the more or the longer you wait to become an owner.
Yeah, and to touch on that too, Mario, I mean, like you just said, interest rates fluctuate. So we saw where you said I think it was June, where we had a large increase on the 10-year T-bond, correct? And like you said, last month, rates dropped, and actually the market was steadily decreasing to a point where rates were back in the 4s. Now we might be climbing up to the lower to mid 5s right now, but as people can see, it fluctuates. Yeah, if you put it like,
to your point, right? If you look back pre-COVID rates, we're at about the same rates that we were before back here. Now, if you look at in the short term, this is what you're bringing up, Dom. The rate spike. This is when we got that high CPI. That good news on the inflation. That inflation was slowing down a little bit. Look, that the rates went back down.
Exactly, and it dropped, and that's why most people were saying, you know what, I'm going to wait. it
So
dropped.
now, so
And
now what
then,
happens is if you're in the market and you're trying to time the market and you're just worried about, missing out on this dip, or missing, or maybe the rates here were too high and you didn't get pre-qualified and you're just not ready to buy. Look, you missed out on just becoming a property owner and starting to accumulate wealth over time, right? And again, it's, there's different strategies to owning real estate. There's, short term, medium term, long term. There's flips. There's just the person that just buys their nest egg and that's it. They don't buy anything else, which is, they're all different strategies, right?
Yeah.
They're all good depending on what the goals and that person's finances are. But ultimately, if you wanna just look back at what, maybe make a general suggestion is, if you want to look back at the market for real estate, it continues to go up over time. It's an upward moving machine, and don't worry about the interest rates. Just worry about stop paying rent. Don't pay somebody else's investment when you don't have to. You can be a property owner yourself, right? And if you still have equity in your property, you should definitely be pulling out the equity, taking advantage of that equity, because that's one of those things that if you don't use the equity and the market corrects and it comes down, you lose the equity. You can't go back and use it again.
Yeah. And what other way to spend the equity when you pull it out than to put it into another property? You
Yeah.
get ready to buy that dip.
Look, there's different ways of investing, and stocks, crypto is they're the hot topics now. But in my opinion, one doesn't have to replace the other. It's not like we have to come on here and say that real estate is better than stocks or better than crypto. It doesn't have to be that. They each have their position in a portfolio of investment. You have to diversify. You should definitely start out with real estate, in my opinion, instead of continuing to be a renter. If you're a tenant, you're just delaying your growth of wealth. The number one investment someone should make, in my opinion, is purchase their property. Stop being a renter. Then from there, you should build your portfolio, build your stock portfolio, build your 401k, your crypto. They don't have to replace one another. They're each good, depending obviously on the person, but they don't have to replace one another.
Yeah, definitely.
I think that going forward, where it's worth obviously keeping an eye on the interest rates, just kind of seeing what the properties values do. So we'll continue to bring you the updates from our office, some more stats and so forth. But other than that, Dom, I foresee, like I said at the beginning of the year, a little bit of a market correction as rates continue to push the property's values down, or at least put pressure on property values to come down. We're seeing inventory increase a little bit in single family residences, which in my opinion will also drive property values down. But I think ultimately rents will continue to go up, because if less buyers in the market, that means more tenants. More tenants means more demand for rent. More demand for rent means higher rents. So that's all I got for now, unless you want to add anything else.
No, man. Covered it up.
Sweet. Awesome, guys. Thank you so much. We're looking forward to continue to bring you some more of these market updates. But other than that, thank you for being on here. Stay safe, and until next time. See ya.